Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, the 10th of April, 2019. Just getting on to 4:45 p.m. Central Daylight Time. A gain today in the stock market, minor in the Dow. It's still the weakest of the indices. The Nasdaq just keeps charging along here as the S&P's doing pretty well also. Dollar a bit lower as the euro climbed. As you saw the Fed minutes today, the Fed staying right on hold. If you saw Steve Mnuchin today, he was on CNBC saying that they have made good progress on the Chinese trade talks. They seem to have the dispute deal agreed to, the parts where they dispute, but there's still the open issue with the non-retaliatory clause. I'll be writing about that in my regular update tonight so that people understand that a little better. As we continue on in the energies, you can see it's relentless as Venezuela is now producing under 1 million barrels a month. At first, the OPEC report this morning was that they had lost about 289,000 barrels a month out of Venezuela. Venezuela claims it's 500,000 barrels a day. And on the grain markets, well, any good news that you get on trade helps the beans a little bit and the corn a little bit. We'll see where that all goes. And looking at the yields, you're around 247 in the 10-year. So in looking at the S&P, the market coming up here stalling, but it's a stall. There's no sign yet that this market has really run out of steam. You can see how the market backed off just a little bit here. You can see my cursor. If we can move that, it would help. In looking at how the market is right through there, just sort of hanging in. We still have the pattern of higher lows, higher highs in the market. You'd have to break through 2871 to put that particular pattern in jeopardy, but this is still a strong pattern in the market. If you took that out, I could then make an argument for a retracement to the 18-day average of closes. But what if you take out the 2900 level first? Well, then the upper Bollinger Band comes into play again around the 2915 level. And when I look at momentum, I have the strongest of all my technical indicators, which is called a bullish embedded reading. It's when the momentum oscillator of slow stochastics converts from overbought to locking in and going sideways. As you can see, it's done that through here, and you can see how prices have stayed very well bid. In the Nasdaq, that has joined the ranks of having the embedded reading, and the market is staying through here. Will it get up to the next high of 7687 roughly? Good shot. What I wouldn't want to see in this market is if you look at yesterday's range, 76.3375 to 76.7875, right here. And then we look at today's high, and I'm going to come back to yesterday. See that? We took out the high and low. So I don't like to see the low of an outside day up, and that's what that's called, taken out. If it is, one of my rules, doesn't mean it has to happen, but one of my rules is that often is a sign that price in the closest of the key moving averages, which is the 18-day in this case, often like to make a run at each other from that. When we look at the weaker of the markets, it is the Dow. Now, to me, that doesn't mean I'm right on this. When you lose an embedded reading, as I just said, it often means that price, and this is losing an embedded reading, not the same as an outside day up. When you lose an embedded reading, price and the 18-day average of closes often make a run at each other. They're doing it, but they haven't gotten close enough to satisfy my rule. When we come to the Russell, this is another market that, like the Dow, is not one of the stronger. It is trying to get the embedded reading. Let's see if it did it today. Both numbers over 80, both over 80, and both over 80. So we now have the embedded reading. Until the red line closes under 80, the odds favor the market. If it's now at the 200-day average, it tries to go to its next resistance at the 1599 level, let's call it. When I come to the VIX, you can see how the market seems to be just stuck here. Very comfortable trading against the 18-day average of closes. Not a trend. You have a lower low and a higher high. If the market breaks down to the 1200 level, I would expect to see put writers. You heard what I said, put writers get involved looking for a move back to that 18-day average of closes. In the T-bond market, this correction ended up just holding that line in the sand, that 18-day average of closes. You have a little divergence. You still have momentum pointing down. You have the trend up with higher lows, higher highs, and the bias up over the 18-day averages to close. So until the market takes out the 147.16 level, the bulls have regained control of the market after this correction, and we'll see if they can get away from the divergence that's taking place. You still have that level of divergence in the 10-year notes. The market has the higher lows, higher highs, bullish. The settlement was over the 18-day average. That's 123.24. You closed 123.25 and a half. But momentum isn't up. You know, it doesn't mean it has to be, but it's called divergence. It's when one part's pulling one way, the other's going this way. Often, momentum leads price. In this case, it's the opposite. So the question is, can the price drag this along? Because it's not the way that it normally is. In TLT, it's the same as in the futures. You've got your downside momentum still in place, but you have higher lows, higher highs. You've closed over the 18-day average. What would negate this is taking out 123.52. Barring that, the trend remains to the upside. You know, you could say that could be a resistance point, but what I've learned is when you get this divergence in there, it's sort of like an anchor. It holds back the gains that you would normally expect. In the dollar index, we had an outside day down today. Another thing that happened. Let's take a look at momentum here. If we take a look, both numbers are not over 80. You lost one of the numbers under 80 yesterday. Prior to that, going back to Monday, Friday, and Thursday, you had the embedded reading. When you lose the embedded reading, just the way you did here yesterday, it often leads to price in the 18-day average making that run at each other. So today's low was 96.40 and a half. You see that right there? The 18-day average 96.41. They came together. So I'm going to call the market right now neutral. Why? While the trend is down, the settlement's still over the 18-day average, keeping the bias up, and momentum is pointing down. In the eurocurrency, it's the opposite. You lost the embedded reading. Here you were embedded. Now, you lose the embedded reading yesterday. Admittedly, these numbers are awful close when they did this to their 18-day average of closes. You can see where that's at, and today you go up to it and you stopped against it. So we haven't turned the trend up per se. Yes, the swing line is up, but you need the bias to be up to confirm it, and we already have momentum pointing higher. In the British pound, I have not heard a word as to what the EU is going to say to Miss May. We'll probably find that out later tonight. For the time being, the trend is down. Lower highs, lower lows, support back at 130.27 to 130.07, but you are oversold. Any move over Tuesday's high of 131.67 negates the downtrend, puts into play at least the 18-day average of closes, if not higher. In the Japanese yen, here's what you did, and I think we called this correctly on looking at the chart. Remember, I'm not predicting what markets will do, but what we are talking is this was a downtrend. If you take out the high right here, which you did yesterday, you end the downtrend. You've broken the pattern of lower highs, lower lows, which I define as a downtrend. Now I've got a lower low, higher high. Often, that's all I can say. Markets from that like to go back to a neutral zone. I'll call that my line in the sand, the 18-day average of closes, and sort of hang there. And that's what this market is doing right now. In Bitcoin, I still see the trend as number one, up. Number two, an embedded reading. Number three, riding the upper Bollinger Band, and this is a new high on the move, now up another 195 to 55.26. In the Brent, was this as far as the spread has to narrow in is going to be the question. You can see a big move from yesterday, 66.65. You gained back about 40 cents. The bias is still to the downside. In other words, Brent losing to WTI as a whole because you're under the 18-day average of closes. The market is riding the upper Bollinger Band in the Brent, not even giving you a shot at buying it. It has the embedded reading. It doesn't even pull back. I would still say until the red line gets under 80 that the bulls will be buying the market. But when that changes, when that's lost, then I look for this 18-day average to come into play. In WTI, same thing here. So, part of understanding this means that you understand the idea that I'm not a top picker. This market's got strong momentum. It's running on the Bollinger Band. It's holding on, hoping for a break. If you're trading the opposite, not the smartest thing. Same in gasoline. We've talked about this for months now. You normally go up at this time, but believe it or not, gasoline has an earlier peak than a lot of people normally think. The market prices in the events before the cash catches up with it. In nat gas, when you lost the embedded reading, I still look for price and the 18-day average to come together, and we'll see if the market can do anything from there. The interesting part is it's going to be tonight when we reopen very close to this last high of 273.30. As you can see, it's losing about 80 cents, 90 cents a day, so that's going to put that number probably close to 273 or just under it. I still expect it to be hit. Doesn't mean it has to be. Believe me, I've been wrong plenty of times. You know what I'm noticing in the markets right now? Right now. I'm noticing lack of follow-through other than a couple of the stock indices. You can't argue about the S&P and the Nasdaq. They are on the tear to the upside. You certainly aren't getting follow-through in most of the metal markets. You're not getting a lot of follow-through. We just showed you the correction down to the 18-day average in a number of the interest rates. So I talk about this every morning with trade ideas in a whole different way. I cover in a morning video this exact sequence all the time, and I cover about 45 charts. I do my best to throw in the ETFs that I think are good. I'm going to add to that, keep going with it with other new things that I keep developing. Now I'm putting out, by the way, these particular morning videos. I'm trying to get them to you before 7:30 a.m. Central Daylight Time, so they really impact your trading. So my studio at home today, I got it finally going the way that I wanted. The voice sounds great, and it came out just the way that I thought it should. And now I'll be able to put more time into the actual content of it, because when you're fighting the technical and all, you got to get there. But I'm going to give you an idea on the chart action, what I think the pros are doing in the market. I'm going to give you ideas with window envelopes, a study you don't see here, but it's very important. If you like Bollinger Bands, it's along that theory. And then specific trade ideas just for the day. I'm going to throw them in and out, what I think the pros doing, where I think they're going to buy and sell. So for those of you that are what I'll call more swing type traders, this is something I think you want to look at. It complements these videos that you see here. It is a subscription. It does not break the house. 26 cents a day to give it a try. Is that fair enough? For a whole year, it's $156 if you want it for a year. Otherwise, $15 a month after the first 30 days. You can find out more by going to www.iraepstein.com. Go under our research or education area. Morning subscriber video explains it all there. I'm Ira. You have a good day. I'll talk to you all tomorrow.